Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here.
Good evening, everybody. How y'all doing? Good evening, everybody. Hopefully everybody doing good evening. Man, my eye look crazy. Can y'all see that right there? My eye. Man, I woke up this morning. I was brushing my teeth. And when I stood up, after rinsing out my mouth, I was like, what in the world is going on with my eye? I guess I poked myself in the eye while I was sleeping. Man, thing look real crazy. It's starting to, I could feel it now. This morning I couldn't feel it. It was just, I just noticed it was there when I looked in the mirror. But now, I could feel it. It feel like something in my eye now. Anyway, y'all ain't came here for that, man. Good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, but I want to give you a nice hearty thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. Y'all see it back there? Aranya Grande. That just mean big spot if you don't understand, if you don't speak or hablo, if you will, Espanol. And you're in tune to another episode of the Day Price Action Recap. Yeah, man. Yeah. Man, y'all give it for yourself and putting up. What one of Gemini put together that little thing there for me, man. He put together that little. All I did was put in my thumbnail, and I gave it a prompt. I said, animate this thumbnail, whatever. I can't remember the prompt I said, but that's what it created. It created that video. So I was like, hey, man, shout out Gemini, man. Drop one of the clues. Man, out here doing the Lord's work. How long, you know what I'm saying? You know how long it take me to edit together a video like that in Adobe Premiere Pro? And all I had to do was put in a picture, type something in, and tell AI to do it, and it gave it to me in 30 seconds, man. 30 seconds. Anyway, man, how was y'all day today, man? Anybody doing any trading today? Did anybody do any trading today? Anybody doing it? Man, my face all dry. Did anybody do any trading today? If you ain't do no trading, did anybody do any tape reading? You know what I'm saying? Do anybody got anything they want to get off their chest? Do you got anything you want to get off your chest? Any questions you want to ask before we get into the price action recap? You know, did price do something to bust y'all upside the head today? Did price do something to bust you upside the head today? Why? What in the world is going on? Oh, it's little. Oh, I'm like, why can't I see this? Why is that so small? What kind of... Oh, it was down there. It was down there. All right, man. I don't hear nothing. You know what I'm saying? Ain't nobody... Oh, that's what I did last time. All right. I don't hear nothing. Ain't nobody saying nothing from inside Zoom. Ain't nobody... Let me check the YouTube chat. Steve said, I should have held longer. Why didn't you hold longer then, Steve? You should have held what longer? You should have held a long or a short longer, because price gave opportunities for both today. Gave opportunities for shorts. It gave opportunities for longs. So what should you have held longer? A short or a long? What should you have held longer? Put. You should have held the put longer. Why you saying you should have held a put longer? Did you close it out before the price action told you should be closing it out? Did you close it out before the price action told you to close? Why did you close it out? If you feel like, man, I should have held it longer, why you was just you wasn't trading based off of what price action was giving you? You was trading off of your P&L? You was trading your P&L? You was trading your feelings? What were you trading? Because if you was trading the price action, then you wouldn't be saying, man, I should have held it longer. Guess what? P&L or feelings? Which one? P&L or feelings? See, this is why I like talking to people inside the Zoom. Emotions got the best of me. I like talking to people inside the Zoom because you see how long it took us to have just like a 2-sentence conversation just now. Because he got to type, I got to wait, then I got to read, then if I don't understand what he's saying, then I got to ask, and then once I ask, then he got to type, then I got to wait, then I got to read, and then if I get it wrong, then he got to type something else, and then I done went into this, and then I glance back and see that I got it wrong, then now I got to go back and start talking about what it really is, and then, you see? But if we just talking back and forth via Zoom. Anyway, welcome. You're far too kind. You could have been anywhere else in the world, but you here with me. I'd like to thank you for that. And since you're here, go ahead and hit like for the algorithm. And if you ain't subscribed to the channel, go ahead and subscribe, turn your notifications on. Do me a favor, share this out with somebody who you think might get something out of it. Right? We're going to go ahead and get right into it. We're going to get right into it immediately. I'm going to go ahead and share my screen. And we're going to jump up to the daily chart. Today is Thursday, the 4th day of the week. All right. Let's turn on our new week opening gap so we can quickly see where the week started out. All right. That's our new week opening gap for this week. So as we see on the daily time frame, we are still respecting what discount 20-day PD array are we still respecting? Who can tell me? What PD array that we looked at in the 20-day look back, in the discount of the 20-day look back, are we still respecting on the daily time frame? Who remember the one that we were watching? Do you remember what we were watching? Who remember? Nobody remember. T'Challa, why do I do what I do?
Was it a suspension block?
Nope. Nope. The discount 20-day look back PD array that we have been residing in and respecting the mean threshold of. We've talked about it several times.
The order block?
Yes. The bullish order block from February the 5th. This is our 20-day look back highest high. This is our 20-day look back lowest low. This is equilibrium. Here, the red line. This bullish order block right here, because remember we've been talking about until we offer this price, right, we don't officially have a full bullish order block. But since we've come down, right, respected the low that we anticipated to respect, swept liquidity, displaced back up, right? We're looking at this to be utilized as a bullish order block on the lower time frames below the daily, right? So we're engineering liquidity here inside of this bullish order block, all right? And on the daily time frame, we have been respecting the order block because we are respecting mean threshold of that bullish order block. All right. I'm going to fatten this up so we can see. If I thicken that up, that's mean threshold of that bullish order block, right? So we came down, right? See how the bodies are staying at mean threshold. We went down and set a short-term low while respecting it. We rallied up, took out buy side, right? Came back down, took out that short-term low, left the intermediate term low that we were identifying also, which, you know, we were saying we want this long-term low to stay in place. So if we want that long-term low to stay in place, we want the intermediate term low to stay in place. Came down, swept liquidity right back above mean threshold. Kept going up. Then today, we traded down. Where do we trade down to? Let me guess, Tim. Mean threshold of that order block. Yep, you're right. But there's no algorithm. Right? So we came down to mean threshold of the order block, traded back up, and so we're still in this range, right? We are still in the middle of the road. We're still in the middle of the road, right? Why do you say that, Tim? Right? Go over here. That's our highest high. That's our lowest low of this area where we've been consolidating. We've been hanging right here around the middle of the road, right? That is the true definition of consolidation, right? Tim, what do you mean? Right? So this right here is the middle of the road. What is the middle of the road? That's fair value. Equilibrium, if you will. Price, right? Moved away from fair value, came back to it. Moved away from fair value, came back to it. Hung at fair value, moved away from fair value, came back to it. Moved away from fair value, came back to it, right? So we're just sitting right there, consolidating, aka engineering liquidity. So on the daily time frame for the NQ futures right now at this point in time, it is not giving you any clear indication of if it wants to expand higher or lower, because we're just consolidating. And we have been consolidating ever since we came back into this range on February the 12th. So for $15 trading days, 22 calendar days, we have just been consolidating on the daily time frame, ranging, if you will, right? And we've been having very large range days. So what does that mean? A whole lot of people been getting sent to the reset line. Speaking of the reset line, Apex is having a 80%, 85% off sale right now. Like the second or third link in the description down there, it has an affiliate link for me if you want to, try your hand at Apex. Hey, go knock it out. They got some pretty good new rules over there. The only rule they got is don't hit your max trailing drawdown and trade 5 days reaching at least a minimum amount, right? And once you hit your threshold, you can request a payout. They said if you get the payout screen, you will not be denied because everything is automated. So if you break any rule that it's not automated, you won't make it to that payout screen. But if you don't break any rule, if you get to that payout screen and you request, you will not be denied. That's what they said. That's what they said. So use my coupon code. I don't know what it is. I ain't got a fancy coupon code that I can just tell you. Use such and such. Mine is the default computer made up code, but use mine. Shout out to the person that bought some evals last night. I don't know if it was resets or what. I don't know what it was, but I got a notification saying somebody used my code. Appreciate you. You know what I'm saying? Appreciate you. Help your boy out, man. Help your boy out. They done changed up they thing, man. I used to, I used to get a little piece of change every month from them because people be buying evals. You know what I'm saying? Just get like a couple $100 every month. I don't be making no big money off Apex. You know what I'm saying? Just be making, used to make about $300 a month. You know what I'm saying? But now they changed their rules starting in January where they won't send you no affiliate payout until your balance get over $1,000. So now it's got to be over $1,000 before they send me any money off the affiliate side. You know what I'm saying? I used to like that little extra money every month. You know what I'm saying? Yeah. Sometimes I get like a little $250. Sometimes I get like $300. I ain't got no big channel. But man, that little extra, you know what I'm saying? That was McDonald's money. Me and my kids like to eat out. McDonald's money, you feel me? Little gas money. It's just little mess around money. Just be doing tinkering money. But now they done changed it. Now I got on my normal cycles of how people used to be using my coupon code. Now I gotta wait like 3 months to get a little extra money. Come on, man, y'all help me out, man. Go use my code, man. Come on, help me out, man. Please, man. Anyway, so that's where we at, man. We're in the middle of the road on the daily time frame. As you can see, we're in the discount still of our 20-day look back. If we look at that again, in the discount of our 20-day look back, right? We are right there at equilibrium of the current dealing range, right? The most recent dealing range here, right? From that weekly high all the way down to this week's low. So from last week's high to this week's low, that's the current range that we're in, right? Why? Because we came up, took our buy side, traded down, took out sell side. That's the current dealing range that we're in on the daily. So we're slight premium, pretty much in the middle of the road though. We've been hanging out right there, pretty much in the middle of the road. So there ain't a whole lot to go off on the daily time frame. It's not really giving you any type of displacement. No evidence of institutional sponsorship of a move yet. We're still in the accumulation phase, the engineering liquidity phase. That's where we are on the daily time frame. You feel me? All right, man. Now do me a favor, hit a like for the algorithm, subscribe to the channel if you ain't, and then we gonna Oh, excuse me. We're gonna go ahead and drop down into the hourly time. Oh, we didn't even look at pretty much what we did for the day to day. Forgot to mention that part, how we interacted day to day. So Monday, right? Monday and Tuesday, we came down and made a low. Then we rallied up. We said that gave us a bullish Judy swing. Then today we retraced back down, right? Remember we said mean threshold of the order block, right? Came down around mean threshold of that order block, right? We didn't even make it to it, right? Unwillingness to make it to mean threshold of the order block. If you go just off the body, we did get below mean threshold, but the entire order block, we didn't make it, right? So we came down into this order block, into our overall order block, and then came back up, closing above mean threshold of the order block. Remember, bullish order flow, you want to see price respecting the down close candles, meaning close above mean threshold. You want to see up close candles, right, get violated and push through, right? You want to see them, if it's an up close candle that's above you, you want to see price push through it, right? You want to see price come down and respect down close candles. All right, bullish order flow inside the consolidation. Now dropping down to 60 minutes on the intraday time frame, looking at our 60-minute chart. We can, what is this right here? Oh, that's our daily high. All right, looking at our 60-minute chart, this is where price opened up last night at 6 p.m. Price traded up, right, from 6 o'clock up and through this, from 6 and 7 o'clock hour, right, went straight up, took out the previous day's high. Boom! Took it out. Traded up into the lower quadrant of that hourly SIBI that we pointed out yesterday. Right? Remember when I asked, who can remember, who can tell me, why did we point out that SIBI right there? Who remember from yesterday? Why did we point out that SIBI?
First.
Why did we point out that SIBI?
It's the first.
Say it again.
It's the first.
It's the first what? Come on, man. Come on, give me some more.
It's the first SIBI before we took the low.
Yeah, the first imbalance created in this displacement down right here. All right, the first imbalance created before we got this displacement down there. Also, the first imbalance created with displacement after this turtle soup over here. Right, we got a turtle soup there. We got a turtle soup here. All right, so it's the first after the algorithm did something in line with a narrative, right? That's what you're going to be looking for to get those reactions off of. Because if you're looking for it to act as resistance, even if temporarily, you want to see it act as support when you trade through the other side of it. And that's what makes that a high probability to be an inversion fair value gap. True resistance turned support. Okay, that's why we picked that out. Now, what did we state when we traded up to it right here yesterday? We said we anticipate price utilizing this to give us some type of retracement, even if it's temporary retracement and not a complete reversal of this buy program here, right? And so today, what did we get? We traded up into the lower quadrant of that SIBI from February 26th at 9 a.m. And then we got us a nice deep retracement coming all the way back down into an hourly order block, coming all the way back down to a 4-hour busy. We're going to go to the 4-hour and look and see why we picked that out. Trust me. And we came out, if you look right here on this time frame, all right, on this time frame, can y'all see what that, let me make it bigger so y'all can see what that is right there. Let's see. Tim, you don't have it marked out. Why don't you have it marked out? Because I got the higher time frame one marked out. I don't need to mark out everything. But what is that right there? What is that? Somebody tell me what that is. Right, if I go from that wick to that wick, what is that right there? What is that right there? All right, let me go to a Fibonacci tool so you can see it. Right, do like that. What is that right there? Can y'all see that? Can y'all see that? Let me fatten this up some. Could that be a bullish fair value gap? Could that be the first fair value gap off that displacement right there? Could that be the same thing but on the opposite end of that move?
Where it's at now, it's a reclaim fair value gap, correct?
You said where it is now? I'll look at it in a second. Right.
No.
You talking about coming back down to that?
Yeah.
Yes. It's being used as a reclaimed fair value gap. Yeah. Being used as a reclaimed fair value gap. Now, I'm hovering right here by this candle right here because I want to look up there and see what the low was on that candle. The low of that 1 p.m. candle is 24,722 and a half, right? 24,722 and a half. That fell 2 1/4 points shy of consequent encroachment of that gap there. Consequent encroachment was 22,770 1/4. So 2 1/4 points shy of consequent encroachment. Not showing a willingness to hit that level. Nice reaction up off of it, right? Healthy respect of that bullish fair value gap right there. And to the since Marco pointed it out, he said it is a reclaimed fair value gap. Let's look at why. Because when we created it here, right? Price created. I keep going to the bottom to grab my tools, but I moved them up here because I kept moving my tools around. All right. So we came here, we created it. Right. Then we swept liquidity. Then we came back and created an inversion fair value gap. Remember what I said. You want to look at that first imbalance on a displacement leg, right? And if price gets to the other side of it, you're looking for it to act as resistance, even if it's for a short period of time. So it act as resistance. And since we're anticipating this to act as resistance, once we get back up here and close above it like this, we've created, once we came back up here and closed there, we've created or made or confirmed or whatever you want to say, a reclaimed fair value gap. And how does Michael teach it? This is a first touch. But notice here, this first touch is trading down into that BISI right there. Right? Trading down into that BISI right there. Why? Because that BISI is the discount PD rate of that latest expansion leg of this dealing range right here. That's your low, that's your high, but we moved up, paused, moved up. So this is the latest expansion leg. That's the discount PD rate. Then it went up. So when price created it, traded away from it, and then retraced back to it, the way Michael teach how to use his PD arrays, got up off it. Institutional order flow entry drill on the reclaimed fair value gap, aka resistance turned support. Oh my goodness. Then we just talk about that on the daily time frame. You just flip it over on this. You ain't got to flip it over. You ain't got to flip it over. Because in this case, it's doing the same thing, but this is a reclaim, and the other one we'll talk about it becoming an inversion. But it ain't no algorithm. Ain't no algorithm. All right, so as you see here, we came up to the lower quadrant of that hourly SIBI that we was watching, saying that we anticipating that to send us back even for a short-term retracement, right? And even if it's just a short-term retracement, we expect some type of pullback off of it. We came down, right, to equilibrium of the latest expansion leg of our current dealing range, right? This is our daily low. This is our daily high. That is our algorithmic dip. Yes. That is our algorithmic dealing range, right? This is the latest expansion of that dealing range. So that's why you see I have this low here marked out, and I have a Fibonacci tool anchored there. And then as we expanded the bullish dealing range, right, I anchored the Fibonacci tool to that high, right? So that's the range that I, was operating in today. Right, we came down, as you see, to equilibrium, right, during this consolidation. Right here, during the London Open, we dropped down, manipulate out the sell side from our prior session because the Asian rallied up, came down, and just consolidated. That's it. Didn't give any type of retracement back up on this hourly time frame. So during the London, we dropped down, took out the Asian low, dropped back below equilibrium, right? We rallied up, set relative equal highs, okay, on the 4 o'clock candle. Then as we moved over into the New York pre-market and the New York Open, right, price rallied back up, then took out the London high, left the Asian high, right? Left the intermediate term high, right? It's a little ugly, but it's an intermediate term high. We got a short-term high here, a short-term high here, and a short-term high there. Left the intermediate term high, and then went back and forth for a lot right here. Whole lot of back and forth, sending people to the reset line, right? A lot of back and forth right there. And then over here at lunchtime, we moved back up to a short-term premium, and then dropped all the way down into that 4-hour bullish fair value gap that's down in the discount. I said we was going to look at the we were going to look at the 4-hour time frame, and I didn't. So looking at the 4-hour time frame, you can see that we identified, right, that SIBI right there. Why? Because we had traded up above it and created an inversion. So we wanted to see how would it react when price comes back down to it, right? Now, you notice again, Tim, you marked out this fair value gap right there but you didn't mark out this fair value gap right here, and they're in the same spot. Why did you ignore that? Let me explain to you. Because Michael J. Huddleston explained that whenever there are imbalances on the left side of the curve, he's putting the weight on the imbalances on that side. He's not looking at as we're trading back down here, he's not putting the weight on these imbalances over here. He's putting the weight on the imbalances that are the, for lack of better terms, confirmation on the opposite side of the range, right? So that's why I marked out this inversion instead of that bullish, right? And then I didn't mark out this bullish because it is in the premium of our range. Okay? It's in a premium of our overall range. Now, when you look at the discount of our overall range, right, we have a bullish fair value gap that's down here, right? And then if we look to the other side of the curve, what is this right here? Oh, that's the first fair value gap that was created on this displacement up here. So when we came back down, we anticipated it to act as a inversion fair value gap, and it supplied some sort of resistance and sent us back down, although temporarily. That's a word. Once we get back above it and start coming back down into the discount of our range, what do we want to see? We want to see extreme sensitivity at this area if it's going to be a low resistance liquidity run.
Are those green candles also a breaker?
Say again?
Are those green candles all considered a breaker also?
Yes, this is the bullish breaker right here.
Okay.
That is a bullish breaker. All right? Now that Marco is totally interrupting my train of thought and I don't know what I was about to say, we get sensitivity there and price moves back up. All right? Price moves back up. So now, price is still showing signs of respecting bullish order flow. But remember, we're still just engineering liquidity. But even though we're just engineering liquidity, we can still see signs that price is respecting bullish order flow, right? So if you say, Tim, I can't just sit on my hands every single day and not trade. I do this for a living. I have to make money. Now you have a range that you see the algorithm is in. So now you can look for opportunities, instead of using the daily as your higher time frame for your narrative, come down. Use the 4 hour, use the hourly. You know what I'm saying? Don't get all the way down to 15 minute, right? Unless you really, really know what you're doing. But use the 4 hour at the lowest, the hourly time frame, to give you your bias, your narrative. What is the 4 hour respecting, right? Is the 4 hour respecting bullish order flow? Is it respecting bearish order flow? What is the hourly respecting? Is it respecting bullish order flow? Is it respecting bearish order flow, right? So once you figure out what your higher time frame is respecting, when your structure time frame gets on the same sheet of music, meaning if you're looking at a 4 hour time frame as your narrative and it's respecting bullish order flow, when your 15-minute time frame, which would be your structure time frame, gets on the same narrative of respecting bullish order flow, ooh, y'all feel me now? Yo, ooh, he cooking, let him cook. Drop one of Clue's bombs for Tim. Once the 15 minutes start respecting bullish order flow, now you can drop down to your entry time frame, right? Drop down to your 1 minute time frame and start looking for entry opportunities based off of the 1 minute respecting bullish order flow. And why is that? Because now all stars have aligned, and that is going to give you your best opportunity for a buy. It doesn't negate the fact that if the 4 hours respecting bullish order flow, and then if the 15 minute is respecting bearish order flow, and if you're in a premium, then you can go to the 1 minute and say, hey, the 1 minute is respecting bearish order flow. So now I can short within this range because I anticipated to come back down to a discount for the 4 hour time frame. Oh my goodness. Chef Boyardee. Y'all do me a favor, hit a like for the algorithm and subscribe to the channel if you ain't subscribed. we're gonna go ahead and move down to the 15-minute time frame and look at the New York. we before we move on, Marco, you got any other questions? Don't be throwing me off my game now.
I'm good. I'm good, man. I'm good.
I'll just mess with you, Marco. Yeah, if you got a question, just holler out. Just holler out. I don't script this, so if I get off track, y'all question is more important than me just rambling on. You know what I'm saying? I'll get back on a ramble, but if you got a question, if y'all got a question, just holler out. All right. Let's go ahead and drop down to the 15-minute time frame. If I can get on the right screen. All right, we're gonna drop down to the 15-minute time frame, and on this 15-minute time frame, we're gonna look at let me get some of this stuff out of the way we've been adding to the charts. This right here, this was our daily dealing range, right? These quadrants here, those are our daily dealing range. We already know what this is up here. I'm gonna hide. It's a lot going on, so I'm gonna hide this stuff. This is the hourly SIBI that we was, and yesterday we was anticipating it giving us a retracement, right? Based off of respecting the bullish order flow, we was anticipating a retracement. If the bullish, or if we would have invalidated the buy program, right? Invalidating the buy program would have been trading below this low right here from Tuesday, right? That would have invalidated the buy program. But trading up into that, looking for a retracement back down into a discount. This thick black line there, that's the discount, right? That was because that's the range that we are in overall, right? So it moved back down to a discount overall, and then it also moved back down to a discount of the daily range, our range from yesterday, our short-term dealing range. All right, moved us back down into a discount of the short-term dealing range. All right, so now I'm going to hide the daily dealing range because I got a lot going on. I'm going to hide this overall dealing range. All right, now that we got all of that hid, now we can see that today, Lil Timmy Rogers was operating inside this area here. But Tim, why are you operating inside that area there? Because this here is the latest expansion of our overall bullish dealing range. All right, we started here, traded up, established the range, pulled all the way back down into a discount PD rate, right? Rallied away again, right? And in this time, we didn't pull all the way back down to a discount, right? We came back down into a discount of the latest expansion of this dealing range right here. All right. Then we expanded up here. And yes, at this point, we did come back to a discount of this entire range. But when you look there, this is all pretty much one area, right? Because we didn't really displace away too far, right? We consolidated, pulled back, consolidated, pulled back, and went up, right? So I'm looking at that as pretty much one area, right? And then we get a nice displacement here, right? That we never retrace back down into a discount. And then we come up here and get a bearish break in market structure, right? So that's why I'm looking at this to this as one expansion. Okay, I'm looking at that as one expansion, leaving this balanced price range right there. Okay, got it? Everybody got it? Right, that's the latest expansion of the dealing range that I was watching on the day, and that is why. Okay, so now we already talked about why we were looking at the 4-hour SIBI right here, right? Want to see if that was going to offer support to take us back higher, right? We can see here at, let's just go to 9:30 open. We'll get into it. All right, let's go to the 9:30 open and walk through it piece by piece. All right, let's go to our 9:30 open. 9:30 open. Where are you? Here. Boom. That's our 9:30 open. Let's fatten it up so we can see it. Raise up in font. So we opened up pretty much at equilibrium of our latest expansion leg. All right. We opened up pretty much at like right around equilibrium, right? That's equilibrium right there. Okay. So when we up, I'm gonna make sure I deleted all that. Yes, I did. I wish I wouldn't have deleted all that. Then I wouldn't have to redraw it. No, I wouldn't. So our pre-market buy side is here. That's the highest high before 9:30 open. Right there. Right. Pre-market buy side. All right. Then we come down here. This is our pre-market sell side. Right there. Pre-market sell side. Right there. Okay. So at 9:30, what do we do? Right? We open up. So just think about it. Just think about it. The overall, right, time frame. The 4 hour, we said it was doing what? Respecting bullish order flow. We said the 1 hour, the daily was respecting bullish order flow. Right? So we come into 9:30. Right? We're coming into a new something. Right? Coming into a new something. We anticipate what? Manipulation. Right? So if the 4 hour and the daily are respecting bullish order flow, are they on the same sheet of music? Yes or no? If the 4 hours respecting bullish order flow, the daily respecting bullish order flow, are they on the same sheet of music? Yes or no? Is my YouTube live? Because I don't see nothing.
Yes, sir.
In the chat. Okay, we got a yes in Zoom. Thank you. Right? Yes. So if the daily and the 4 hour are respecting bullish order flow and we're going into a new session and we're looking for manipulation, what do we want to see the market attack?
The opposing liquidity.
The opposing liquidity. Shout out not pulling up with hard hitting answers, right? You want to see it attack the opposing liquidity. But at 9:30, what happens? Boom! We take off and attack the buy side. Why did it attack the buy side? It's not on the same sheet of music as the higher time frames. What do I do? What do I do? You can either sit on your hands and wait until it starts giving you signs of bullish order flow, or you take the opportunity to trade against the grain because you're anticipating it to come back to a discount. Why? Because we said we opened up at equilibrium. And then we went to an extreme premium. That's the high of our range, right? If we were to put that in the fourth grade, right? We put that in the fourth grade. Where is the extreme premium range? The extreme premium range is from the upper quadrant to the high. Anything here is an extreme premium. So now, price on the higher time frame is bullish. Price on this time frame has moved into an extreme premium. Did not give you a manipulation to the sell side. and it engaged the buy side liquidity. So since it engaged the buy side liquidity and the higher time frame is bullish, you can now say, hey, this is going to form a bearish Judas swing because the higher time frame wants to engage sell side before continuing higher. And if I take out the sell side the buy side of my pre-market range first, the sell side is not going to invalidate the buy program on the higher time frame. It's just going to offer sell side liquidity. So now I can look for reasons to short up here in this extreme premium to go back to the opposite side of the range. Oh my goodness. Oh my goodness. Oh my goodness. I need to download the sound for Let Him Cook. I need to download the sound for Let Him Cook. Cause if y'all ain't understanding what's going on right now, I can't say it no clearer. Okay. Now, so we have there. So this is 930, right? We rally up here. Take out that high right there. Okay. Now, what happens between 9:30 and 10 o'clock? Let's go over here and open up our Time is King graphic. Looking at this Time is King graphic, what happens between 9:30 and 10 o'clock? Somebody tell me what happened. 9:30 and 10 o'clock. What is that?
That's the 9:30 open, the opening range.
The opening range. All right? The opening range. Remember what we talking about? We were talking about coming into pre-market, right? We had a pre-market high, pre-market low. We said since the higher time frame was respecting bullish order flow and we anticipate some type of manipulation going into a new thing, and then we didn't see the manipulation to the sell side going into the 930 open. We saw us attack buy side, right? Speaking of buy side, now from 930 to 10, if you look at the highest high from 930 to 10, that's your highest high. Right there, we're going to change his color to blue so we can identify him differently. Right, we're going to change his color to blue. All right, and then, the lowest low between 9:30 and 10 o'clock. Right, that's the low below here. Right, so we're just going to call that equilibrium of the range, because I'll put another line there. I'll put another line there. Right, so we're gonna get this, copy this, come here. That's your lowest low right there. We're gonna change him to blue also. Right, change him to blue. Okay, now, so we got that on blue. I'm gonna hide this for a second because there's a lot going on the chart. Hide that. Okay. Now, when we gaze upon what's going on, all right, you say, Tim, how do I take advantage of looking for signatures to sell in the premium against the grain? We established our opening range. We let the algorithm establish a range. When 10 o'clock opened up, what liquidity did we attack first? Somebody tell me. Talk to me. Which liquidity did we attack first based off of our opening range when we opened up at 10 o'clock?
You attack the buy side.
We attacked the buy side. We're going into a new hour. We're in an extreme premium. We want the higher time frame that's respecting bullish order flow to come back to a discount. So now that means we want this time frame to do what? respect bearish order flow or go into a sell program. So we come into a new hour and we attack buy side first. Now our structure time frame is attacking buy side in a premium at a premium PDub rate. What is that, Tim? We have a rejection block right here. We have buy side liquidity right here, right? And if we take us a little line and do like that, we took out our opening range high. We took out our London high. And then we came back down and closed inside the range. So when we attack that buy side liquidity, right there, when we close back inside that range, now you could be looking at your entry time frame, right? You could be looking at your entry time frame right here, right here. Now this is a 1 minute time frame. Okay. Now we're going to find 1014 is right there. So this is when the next candle opened up right here. So this candle closed right there. And then the next candle opened up here. Now, in this case here, this 1 minute time frame, price moving. It ain't giving you nothing. Price is moving. The only thing that this gives you is if you are the type, and I talk about this all the time, if you are the type of trader who enters upon the creation of PD arrays, this is when that strategy shines for you. Because why? When we came up here, right, and this candle closed, right, we swept out this liquidity. And then when this candle opened, we dropped down and created an inversion fair value gap. And that was the first BISI that was created before price traded up and took out this high and then came back down. So when that inversion fair value gap was created, because I know plenty of traders that as soon as this candle closes, they would go short right there. If that's your strategy, there's your opportunity right there. If that's not your strategy, price did not give you an opportunity. If you have like a wait till it retrace strategy, price did not give you an opportunity until we came all the way down here and had already taken out the delivery, right? Tim, what do you mean? We had already come back to our opening range sell side and our pre-market sell side. So we had already come down and delivered both levels of liquidity right there. So now if you were trying to get short off of this retracement, right? This here, this is why once liquidity is taken, y'all done heard me say this many times. I want a short here, but if we take this low first, I'm no longer interested in shorting up here. And you see today is a clear indication of why. Okay? Because once we delivered, price came back up to a premium. Where did it come back to? Is that a first fair value gap that was created as we took off in this move right here? Yes, it is. It's another one. Go back and look through price. You'll see it too, right? And then we came back down and engineered liquidity right there. Engineered liquidity right there. Did not continue lower, right? Why is that? Because price has done a lot right here. So now that price has done a lot, it's moving into engineer liquidity time, right?
Question for you. That gap we just hit, that's not the 4 hour gap that we identified on the higher time frame, is it?
Yes, it is.
That is?
Yes, it is.
Okay, so that's the gap that's also coupled with that 4 hour breaker and everything.
Yes.
Okay, cool. So it just came back into it. Okay, thank you.
Yeah. So it came back down there, and that's the inversion. And what did it do? It served its purpose for a short time. It gave us pretty much, look at this right here, is time distortion, because we're just engineering liquidity after this big move there, right? We attacked one side of liquidity, attacked the other side of liquidity. So now we've established a new range, right? We've established a new dealing range, new bearish dealing range. So now that we've established a new range, now we're just down here engineering liquidity here, okay? Just engineering liquidity. Now, after we just engineering this liquidity and we're bouncing off of this inversion fair value gap on the 4-hour time frame, okay, we rally up, come back above midnight. Once we come back above midnight, we break down, right? Sweep that low, trade back up into that fair value gap right there, right? And then we continue down. Do we take the low that time? No, we take this low, but we don't take that low. Then we trade back up, right, into that pre-market low. Then we break down and finally take that low, right? We finally break down and take that low. Once we break down and take that low, right, we come back up into the fair value gap, right, at consequent encroachment of that 4-hour fair value gap that was once support, true support and resistance. Oh my goodness. He just keep proving it over and over and over again. I hate him. Right? And then we drop down into what? The sell side liquidity, and also what? The bullish 4-hour PD array that is now a reclaimed fair value gap. Bark up! Right? Hit it. Once we hit that, right, then price trades back up into a premium of the latest expansion leg. We drop down, take out the short-term low inside of the bullish reclaim 4-hour fair value gap, right? Now these are 4-hour candles. So this is the open of a new 4-hour candle right here. See, 6, 7, 8, 9, 10, 11, 12, 1, 2. Yes. 2 o'clock is the open of a new 4-hour candle. 10 o'clock is the open of the one prior to. So if we squash this up,
Even with all of that, on the 4-hour, like you said, we came down and we hit the true support of that inversion. However, if we went back to the 4-hour, because we were utilizing that as our higher time frame, was that inversion in a discount, or the bullish was the discount? I'm trying to see if you would still, even though we took out that liquidity and hit that inversion after we went back up above midnight, would we consider going lower because the ultimate target was coming back into a discount on our higher time frame? Does that make sense?
yes. For looking at trading from the higher time frame, you want to buy in a discount. So that's why we're looking at the discount PD array. We talked about that earlier when we said, why was I marking out these PD arrays? We said that I marked out this because we want to see if that's going to act as an inversion. Because like Marco pointed out, we have a bullish breaker right here. So if you have a bullish breaker, right, instead of buying at a touch of the breaker, you want to buy at the inversion is a better opportunity to buy, right? So we're watching that to see if price wants to continue higher off of that. But if price doesn't want to continue higher off of that, this is our discount PD array, right? You have an order block there. You could have been watching the order block, but like Michael says, he puts the weight on the imbalances on the opposite side of the I'm having a brain cramp. On the opposite side, I can't think. right? I can't think of the name right now, but on the opposite side, curve, on the opposite side of the curve, right? He put it on the imbalances over there. So that's why we're marking it out. This is the discount PD array there. Okay. This right here is in the premium of our range, but it's the inversion fair value gap at the top of the balanced price range. So the inversion fair value gap paired with the breaker, if it's going to be a low resistance run, you don't want to see it coming back to the order block. That's why we're watching that. But if we're getting a deep retracement, we're looking at the discount imbalance, right? And like I say, you can be watching the order block if you wasn't aware of the reclaimed fair value gap back there. Okay. And I don't know where I was. I don't know where I was, but 4-hour candles, right? So all of this here, if you see, all of this is a 4-hour candle, right? We're watching this to see how price trades in respect to the 4-hour range, right? So as we're coming here, right, and doing all of this bouncing back and forth, right, it's all fine and dandy, right? It's doing its job, but it's doing its job on a lower time frame, which is cool. You can use that for trade ideas, right? But then we come over here and we close the 4-hour candle right there, right? So now we're back below the inversion fair value gap. So now we're back below the inversion fair value gap and we're in a discount of the move. We're at a 4-hour bullish PD array. This is our anticipatory reactionary point. That's our higher time frame bullish PD array. We have gotten there, right? Well, Tim, why do you have that sell side marked out? I'm glad you asked that question, little Timmy Rogers, right? This is internal sell side liquidity, right? For our overall range. This is internal sell side liquidity for our overall range, right? This sell side liquidity rests before our anticipatory reactionary point. So we want to see that get taken out as we're coming short. This one here rests inside of our PD array. So we're allowing for that to be taken out. Right? That's why it's marked. You want to know how far can price go and why. Okay? Okay. Right? So we come here, close that 4-hour candle right there. The next 4-hour candle opens up, right? We trade up. We drop down. Do not take out the low. Remember, we're still inside this chop suey, right? Price has made a big move, and now it's just consolidating, right? We talk about it all the time. Remember, we just said that price made a big move, and then we just went into this consolidation, right? Price made a big move, and we just consolidating. Now that we're consolidating, right? What did price do? Pow! Got up out of there. I got to get up out of there. Price got up out of there. Now, on a 15-minute time frame, did it give you anything you can participate with? Again, if you trade based off of things being created, right? If you trade based off of things being created, right? If we look at our consolidation area, right? This is the largest down close candle in that consolidation area, right? When we offer that opening price right there, that gives us our change in the state of delivery, right? This one got the lowest close right there as we came down, taking out this liquidity. As we offer that price right there, that gives us a change in the state of delivery on this 15-minute time frame. And price is not showing a willingness to go lower, right? So now let's drop into the lower time frame and inspect this area right over here.
Before you do that, wait. I have a question. Have you heard this? I heard this from someone else, and I'm trying to confirm with you. Like the last civvy that we had, not the first one, but the last one that was used, price went back up into it and then pushed down to take that liquidity and make the swing low.
Talk about
Have
this one
you?
here at
Yes.
12:30.
Someone else, like I said, I have said that serves as a high probability inversion because it was utilized it was utilized as a resistance to go take liquidity at that anticipatory level. Is that true? Is that a Michael teaching, or is that something that somebody just kind of made up?
I've never heard Michael say that.
Okay.
I've never heard Michael say that. So the only thing I heard Michael teach for inversion fair value gaps was that first imbalance when price is displacing away either from a displacement or after a turtle soup. That first imbalance. That's the only thing he hasn't. I haven't heard him publicly teach about this right here. Right now, the only way I would look at this as the inversion fair value gap is if this SIBI here was inside the range and this was the SIBI that broke the range. Then I would look at that as the first imbalance of displacement and then look at that as the inversion fair value gap. But Michael hasn't taught that. And if you look at what the algorithm did, which one did the algorithm use as the inversion fair value gap? This one. Came back down to it and went up. Right? That's all I can say. I've never heard this from Michael, and I'm looking at the proof here that it's using what Michael teaches. I've never heard this over here. Okay? I mean, you're welcome to back test it to see if it's got any validity, but based off of Michael's teachings, I've never heard him teach anything about using this lower one as a high probability inversion. Yada, yada, yada. Never heard that. All right, so going down into this area here after we offered that right there, right? So looking at the 1 minute time frame. Let me chop some of this off so I ain't got to scroll so far over. I'm gonna chop it off here. Then we're gonna drop down to the 1 minute time frame. All right. And so here we go. This is, let me go back to 15 minute real quick. Let me put my price up there so I can see what it is because I'm not looking at it in real time. That's my price there. All right. So once we come here, remember what we said. Once we offer that, that's our change in the state delivery. Once we offer that price. Okay, so now we've offered that price and we've gotten a change in the state delivery. Okay, so now we're watching our lower time frame to see if price, looking for signatures that are we going to continue higher. All right, so we come down here, right? We get a bearish breaking market structure after taking out this liquidity, trade back up into the fair value gap, right? Trade down, right? And where do we stop? At the order block, right? So we take liquidity, get a bearish breaking market structure, move back to the premium of this move here, and it doesn't send us lower, right? We stop at the order block. So now that's not showing I want to continue down. All right. Now let's come back. We're already, because we always want to focus on time and price. So let's do this right here. I'm going to turn on a thing to show the afternoon. All right. So let's go to New York. We're going to do 13:30 to 4 o'clock. All right. So this is when the afternoon session started. All right. So we always want to look at time and price whenever we're doing everything. I hit the wrong thing. All right. So this 1:30, this 2 o'clock. Boom. That's the high. Between 1:30 and 2 o'clock, our opening range for the PM. Okay. Then it's 1:30. That's our lowest low for the PM. I should have changed that while I was on that tab. All right. So got our buy side, got our sell side, right? That's our opening range. Okay. Then during our opening range, right, we've come down, we set relative equal lows, right? That's our highest high, our lowest low, right? That's our opening range. Then when we open up here at 2 o'clock, right, we rally up and we engage the buy side and get our change in the state delivery. So as we're engaging the buy side, we're getting our change in the state delivery, right? So then we come down and get a bearish break-in market structure here, right? And then it trades up into a premium, but it doesn't make it to the opposite side. It stops at the order block. So now this premium PD array has failed to do its job, right? We stopped there and now we're just engineering liquidity. All right. Now, while we're engineering liquidity here, we come back up, right? And we get an inversion fair value gap, right? We come back up and get an inversion fair value gap. So now this is saying, oh, well, first of all, we didn't take out that low, right? Respecting discount PD rate, respecting the low. Won't take it, right? So we didn't hit it, stopped at the order block, right? Consolidating, failed to take out the low, and then created an inversion fair value gap, right? And then this candle here, right? Along with these 3 candles there, but this here, this is the largest body. This candle has the lowest close, but it's relatively close and it's inside that. So we're looking at this right here. This is the one that came down and formed the low, right? So now when we came back up, we got a change in the state delivery there. We got an inversion fair value gap there, right? So now this is starting to do what? Respect bullish order flow. And we did not take out that low. So now we've got a change in the state delivery for the higher time frame, and now the 1 minute is starting to respect bullish order flow. So guess what that means? That means the 15-minute got a bullish change in the state delivery. That's in line with the 4-hour, because the 4-hour was respecting bullish order flow. We're at a 4-hour discount PD array. The daily is respecting bullish order flow. We're at a discount PD array in our dealing range. The 1 hour has now started respecting bullish order flow. So when we trade up here and take out that high, then start retracing back down into the order block and the first SIBI that was trading down, we can be looking for reasons to buy at this breaker, at this inversion, at this order block to continue up. All right. And then we leave there, we see, oh my goodness. Oh my goodness. Oh. Y'all do me a favor, hit a like for the algorithm and subscribe to the channel if you ain't subscribed. I'm tired of talking, man. I'm tired of talking. I yield my time. I yield my time. Do anybody got got anything for me, man? Do anybody got anything for me? Huh? All right, man. We gonna go ahead and call it death. Ain't nobody got nothing. I got a question. What's your question, Sam? Sam B. Song. What's up, Felicia? Gang. Tomorrow is pre-market analysis at 9 o'clock. Man, my eye look crazy. Tomorrow is pre-market analysis at 9 o'clock. Is the first thing you do before even thinking about placing a trade is identify the range? Yes, it is. Yes, it is. I want to know where I am in price before I do anything. The first thing, and the reason why, Sam, is because if you don't know the range you're dealing in, how are you even dealing? It's called a dealing range. So I need to know, am I in a premium of my dealing range? Am I in a discount of my dealing range? If price is bullish and I'm in a premium, I know I need to be waiting for it to move to some type of discount. If it's bearish and we're in a premium, I may be got to the chart at the most optimal time to be looking for a short. But the first thing I do is identify the dealing range because I want to know where is the liquidity, where the money reside, where the money reside, where the money reside, where the money reside. The dealing range is going to let you know where the money reside. The highest high in the dealing range is where the buy side liquidity is. The lowest low in the dealing range is where the sell side liquidity is. The algorithm is going to seek liquidity and imbalances. So whenever you look at a chart, no matter what time frame you're looking at, right? You just want to squanch it up. You want to squanch it up and say, hey, where are we? Where was the last time? Do you use a fib? Yes, I do. The Fibonacci tool is probably the most powerful tool in your arsenal if you understand where to anchor it.
Class coming soon on Fibonacci.
Yes, it is. Yes, it is. The class is coming soon on the Fibonacci. But here's the gag. If you have tapped in to my channel, if you have tapped into Michael, you already know how to use the Fibonacci tool if you've done the work. Yeah, man. You already know how to use it. You already know how to use it. Yes, I use fibs, but I don't KT1 gaming. I don't use it in the traditional sense that people just tell you to anchor it to a high and low and look for a 62% retracement. And I don't use it like that. I use it based off the ICT concepts, and there's algorithmic reasons for anchoring it to a low, a high, a body to body. It's all different things. You have to understand, why am I reaching for this fib? Am I reaching for the fib for this? Am I reaching for the fib for that? You got to know why you're reaching for the fib and how you are going to use it to aid you in your trade decision. Right? Everybody be like, what's your fib settings? Well, what you using the fib for? They always, that first thing, what's your fib settings? Okay, it don't matter what my fib settings is. You got to tell me what I'm using it for first. Because if I'm using it for a projection, it's going to be different settings. If I'm using it for equilibrium, it's going to be different settings. If I'm using it for putting it in the fourth grade, it's going to be different settings. If I'm using it for OTE, it's going to be different settings. Right? If I'm using it for TGIF, it's going to be different settings. Right? If I'm using it for mean threshold, consequent encroachment, equilibrium, event horizon, those are all the same settings. Just different names. See, same setting, but used for different things. I was talking about squanching it up, but you squanch it up and you look to see and say, hey, what's the current dealing range that I'm in? Let me get all this stuff off my chart. Get out of here. Get out of here. All right. So, right, you just squanch it up. All right, this is a 1 minute time frame. So let's go. I'm gonna go to a 60-minute time frame, right? That just for intraday trading, right? 60-minute time frame. That's a great higher time frame to base your narrative off of, right? It's a lot of range in 60 minutes, but I like to start from the top down. I like to understand what is the weekly and daily doing 4 hour, and then once I get down to the 60-minute, I gotta like kind of an understanding of where price is, right? But looking at price right now, right? Looking at price right now, we squanched this up, right? It's clear to see that this is the highest high. That need to be green or it's gonna mess with my mind, right? And that this is the lowest low, right? For where this is the latest dealing range for where we are in price right now, right? This is the latest dealing range for where we are in price right now. But damn, why do you say that? Because if we look here, we have just been consolidating, right? All up and through here. And this high and this low are the last time that we swept liquidity based off this entire range right here, right? This right here was the lowest low and the highest high, right? We're still inside this dealing range, right? This is just a higher time frame dealing range in sense of time based, like the amount of time we've been in this area, right? But this is a very large range to be looking at for intraday trading, okay? This high swept liquidity. Oh, I should have been recording this. This low swept liquidity. So this right here is our, we'll say, current dealing range, right? Current dealing range, short-term dealing range. All right, this is a bearish dealing range. Why? Because we took buy side first and then took out sell side. So this is a bearish dealing range, right? When you're in a bearish dealing range, you're anticipating price to come back to a premium at some point in time to give you a reason to sell. That is why we were watching that fair value gap right there. Y'all remember that fair value gap? We was watching that fair value gap right there because that is the first SIBI that was created on the way down, right? But guess what? We have not been talking about. And the reason why I ain't been talking about it is because I am focused on this because the algorithm is respecting bullish order flow. So I had this marked out to see, so I can know when price gets above it and say, okay, now it's created an inversion. But if we look on the other side of the curve, this is the first BISI that was created when we left this range right here and went up and took out that. So now you're anticipating that to act as what? Oh my God. Oh my God. Even if it's for a short term, right? So now you're inside your dealing range and you're anticipating to come back to a premium, right? And there's your inversion fair value gap that's resting in the premium and it's in line with your fair value gap right there. So you got your confluence of PD arrays right there up here inside an extreme premium of your dealing range, right? bulk up. Right. Come here, put it in the 4th grade. Boop. Extreme premium right there. Right there. Now, so when you understand where you are in your dealing range, right? I'm at the upper quadrant of my dealing range. I'm at my inversion fair value gap. I'm at my bearish fair value gap. And now price is buttoned up against that upper quadrant, right? A 1, a 2, a 3. Right? Not saying it's just gonna hit it 3 times and go, but it keep butting, right? So we came up, made a high, swept the high, right? Breaking structure right there. Traded back up to the order block, right? Traded back up again, right? Drop down. Knowing that you're butting up against the upper quadrant of your dealing range helps you believe in the shorts over here, because you say, hey, I'm in extreme premium of my dealing range. Smart money buys in a discount. Smart money buys below this line. I'm in an extreme premium of my dealing range. So now I can trust shorts up here. And that is why. Right. Yes, you heard a explosion, because that boy cooking. And that is why I look for my dealing range. That's the first thing I do, look for my dealing range. Any other questions? Sam said, hey, anybody else hear an explosion, or am I tripping? You must be new here. All right, man. Anybody got, I'm going to take a sip of this high quality H2O. And then if y'all got some, if y'all ain't got nothing, we're going to call it there. Do me a favor, hit a like for the algorithm. If you ain't subscribed to the channel, you know what to do. I should have been recording. Yes, you'll get used to it. I should have been recording that last piece, because I remember when I told y'all I was gonna start editing the footage from the live stream and putting it on there. That would have been a good gem. That would have been a good gem from the live stream. Let me. I'm gonna show y'all this right here. This is my what's name for Let me do this right here. This is my little intro bumper for the new when I take the segments from the live stream. I got to add it to my what's the name? Hey, come back here. You won't let me work on this while I'm... Oh, keep going to it. It ain't gonna let me... ain't gonna let me add it right now, because it's gonna keep going to it. Hold on. I'll just play it. I'll just play it, because it keep going to it. Let me share my screen. Hold up. Let me open it up first. All right. All right. Let me share my screen. This is the new... Where's my thing? Come on. Desktop only. Right. This my new bumper for the new what's name. That boy been going crazy with the AI. That's the new bumper for the gems from the live stream. When the gems from live stream videos come on, that's gonna be the bumper in the front. That's gonna be the bumper in the front. So I made that last night. And I was gonna drop a couple videos from last night, but I was tired after I was sitting up doing that. And then so that last piece I just did, that would have been a good gem. I might clip up some of the stuff from tonight and put it on there. Yes, going crazy with it. I might clip up some stuff tonight and drop them as videos for people who can't make the live stream or don't want to sit through how long we've been on here. Like an hour and a half. They like an hour and 40 minutes almost. People who don't want to sit through an hour and 40-minute live stream, they'll have a small chunks of video that they can just go to and look at, you know what I'm saying, that segment. And when I be running my mind, them segments might be long. Them segments might be 30 minutes long. All right then, man. That's all I got. Gang. Tomorrow morning at 9-ish for the pre-market analysis. Everybody else, tomorrow's Friday. I don't think I have no plans, so we should be good for a price action recap, depending on how I'm feeling. Sometime on Friday, I'll be like, I'm taking a day off. But I don't think I got no plans. I ain't got nothing going on. You know what I'm saying? Yeah. That's it, man. Hey, y'all give yourself a hand for tuning in, man. Y'all could have been anywhere else in the world, but you chose to hang out with me. All right? Until the next time I decide to get on Algo's internet and share my thoughts on this thing that we call price action. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. Y'all see it behind me. That just means big spot if you don't upload spin, yo. Right? Y'all be safe out here in these trading streets, man. Gone.